10 years from now, most investors will tell themselves a story about how they almost bought that stock, how they saw the opportunity, how they recognized the trend, how they knew artificial intelligence was changing the world. And yet, they did nothing. History is full of these moments. Moments when massive technological shifts created enormous wealth. The internet, smartphones, cloud computing, e-commerce, and now, artificial intelligence. But here's the uncomfortable truth. Most people recognize a revolution only after the biggest gains have already happened. That's because investing isn't really about finding great companies. It's about having conviction before everyone else agrees. And today, a handful of companies are positioning themselves at the center of some of the most powerful trends in human history. Artificial intelligence, automation, data, cloud computing, advanced chips, and next-generation energy. The question isn't whether these trends will shape the future. The question is, which companies will benefit the most? Today, we're analyzing 5 stocks that many investors believe could dominate the next decade. Not because they're popular, but because they're building the infrastructure of the future. Let's begin with the company powering the AI revolution itself. First stock, NVIDIA. If artificial intelligence is the new gold rush, then NVIDIA is selling the shovels. And throughout history, the companies selling the tools often became richer than the miners. For years, NVIDIA was known primarily as a gaming company. Its graphics cards powered video games around the world. But something unexpected happened. Researchers discovered that NVIDIA's chips were incredibly effective at training artificial intelligence models. And suddenly, the company found itself at the center of a technological revolution. Why NVIDIA is so important. Every major AI system requires enormous computing power. Chatbots, image generators, autonomous systems, advanced data analysis. None of these technologies work without specialized processors, and NVIDIA dominates that market. Many of the world's largest technology companies rely on NVIDIA hardware. Tech giants are spending billions of dollars building AI infrastructure, and NVIDIA is one of the primary beneficiaries. That's what makes the company fascinating. It's not simply participating in the AI revolution. It's helping power it. The big risk. Of course, great opportunities come with risk, and NVIDIA is no exception. Competition is increasing. Technology changes quickly. Governments are paying closer attention to advanced chip exports, and expectations are extremely high. When expectations become too high, even great companies can disappoint investors. That's why successful investing isn't just about finding great businesses. It's also about understanding risk. But if AI continues expanding throughout the global economy, NVIDIA could remain one of the most important technology companies on Earth. Stock 2, Palantir. Now let's move to a company that many investors still don't fully understand. Palantir. For years, Palantir operated mostly behind the scenes, helping governments analyze data, supporting defense operations, managing complex information systems. Most people never heard of it, but recently, that has started to change. Why data is the new oil. Data has become one of the most valuable resources in the world. Every business generates it. Every organization collects it. But collecting data isn't enough. The real challenge is understanding it. That's where Palantir enters the picture. The company develops software that helps organizations make better decisions using massive amounts of information. Think of it as a system that turns overwhelming complexity into actionable insights. And in an AI-driven world, that capability becomes increasingly valuable. The AI opportunity. What makes Palantir especially interesting is its focus on enterprise AI. Many businesses want to use artificial intelligence, but they don't know how to integrate it safely. They don't know how to connect AI systems with their existing operations. Palantir is attempting to solve that problem, and if it succeeds, its growth potential could be significant. The risk. However, Palantir remains a higher risk investment than many established technology companies. Its valuation has been debated. Its future growth must justify investor expectations, and competition in AI software is becoming intense. but that's often the trade-off. Higher potential rewards frequently come with higher uncertainty. Stock 3, Amazon. Most people think they understand Amazon. They use it regularly. They order products. They receive packages. End of story. But investors see something much bigger. Amazon isn't one business. It's multiple businesses operating under one roof. And that's what makes it so powerful. The hidden empire. When investors analyze Amazon, they often focus on three major growth engines: e-commerce, cloud computing, and digital advertising. Each of these industries is enormous on its own. Amazon participates in all three. Its online marketplace continues connecting buyers and sellers. Its advertising business continues growing rapidly. And its cloud division, Amazon Web Services, remains one of the most important infrastructure providers in the digital economy. Why AWS matters. Most people never see AWS, but millions of businesses depend on it. Websites, applications, startups, large corporations. Many rely on Amazon's cloud infrastructure, and that creates recurring revenue. The type of revenue investors love, because predictable cash flow often supports long-term growth. The big question: can Amazon continue growing despite its enormous size? That's the question investors must answer, because large companies eventually face slower growth. But Amazon continues finding new markets, new technologies, and new ways to expand. And that's why many investors believe the company may remain one of the most influential businesses of the next decade. Stock 4, Tesla. When most people hear Tesla, they think about electric vehicles, cars, factories, Elon Musk. But that view may be too small, because Tesla's long-term opportunity extends far beyond automobiles. Tesla is attempting to build an ecosystem around transportation, artificial intelligence, robotics, and energy. And if even part of that vision succeeds, the company could look very different 10 years from now. It's not just a car company. Here's what many investors miss. Traditional car manufacturers primarily sell vehicles. Tesla is trying to create multiple revenue streams: electric vehicles, energy storage systems, solar solution, autonomous driving technology, artificial intelligence, and potentially humanoid robots. That's what makes Tesla fascinating. Investors aren't simply buying today's business. They're betting on what Tesla might become. And that creates both opportunity and risk. The autonomous driving opportunity. Imagine a future where vehicles drive themselves. No steering, no human intervention. Transportation becomes a service. The global economic impact could be enormous. Tesla is investing heavily to make that future a reality. Whether it succeeds remains uncertain. But if autonomous driving reaches mass adoption, the companies leading that transition could benefit tremendously. The risk. Tesla is one of the most debated companies in the market. Supporters see innovation. Critics see overvaluation. Both sides make strong arguments. Competition in electric vehicles is increasing. Global economic conditions affect demand, and expectations remain extremely high. That's why investors should always separate a great story from a great investment. The two are not always the same. Stock 5, AMD. Let's move to another company benefiting from the technology revolution. AMD, Advanced Micro Devices. For years, AMD lived in the shadow of larger competitors. Many investors ignored it. Many analysts underestimated it. But over time, the company transformed itself. The comeback story. One of the most powerful stories in business is the comeback story. A company improves its products, strengthens leadership, executes better than expected, and gradually changes how the market sees it. AMD has done exactly that. Today, its processors compete in gaming, data centers, artificial intelligence, enterprise computing, and high-performance systems. Markets expected to grow significantly during the coming decade. Why investors are watching? The demand for computing power continues increasing. AI models require more processing. Cloud platforms require more infrastructure. Businesses require more technology. And AMD is positioning itself to capture part of that demand. If AI adoption continues accelerating globally, companies supplying critical hardware may experience substantial growth. And AMD remains one of the companies investors are watching closely. The challenge, however, the semiconductor industry is fiercely competitive. Technology leadership can change. Innovation never stops. And market share battles are constant. That's why investors must focus not only on opportunity, but also execution. The future belongs to companies that continue innovating, not those that simply had success in the past. Which stock has the highest upside? Now comes the question everyone asks. Which stock has the biggest upside potential? The honest answer? Nobody knows. And that's exactly why investing is difficult. If the future were obvious, everyone would already be rich. But here's what we can evaluate. Which companies are positioned at the center of major trends? Which companies possess competitive advantages? Which companies continue investing for the future? Which companies generate real value? Those questions matter more than predicting next month's stock price. The biggest mistake investors make. Many investors spend their time searching for the perfect stock, the perfect entry point, the perfect prediction, the perfect moment. But history suggests something surprising. The biggest fortunes were often built through ownership, not prediction. Think about investors who owned great companies for decades. Many experienced recessions, market crashes, economic uncertainty, political turmoil, and yet, long-term ownership often produced extraordinary results because great businesses have a habit of creating value over time. What smart investors look for? Before buying any stock, ask yourself 5 questions. Question 1. Does this company solve an important problem? Can competitors easily replace it? Question 3. Is the industry likely to grow over the next decade? Question 4. Does management allocate capital intelligently? Question 5. Would I feel comfortable owning this business for 10 years? If you can't answer those questions confidently, you may need more research, because investing should never be based solely on excitement. It should be based on understanding. The lesson most investors learn too late. Let's be honest. Most people don't lose money in the stock market because they're unintelligent. They lose because they approach investing with the wrong mindset. They focus on price instead of value. They focus on short-term movements instead of long-term business performance. And they focus on excitement instead of understanding. That's why so many investors jump from one trend to another. One month it's AI. The next month it's electric vehicles. Then it's crypto. Then it's something else. They spend years chasing the next big thing, while completely ignoring the power of patience. And patience is where wealth is usually built. The real secret of wealth creation. Imagine 2 investors. The first investor spends 10 years constantly buying and selling, trying to predict every move, trying to beat the market, trying to outsmart everyone. The second investor buys exceptional businesses, continues learning, remains patient, and allows time to work. Who do you think wins? History suggests the second investor often has the advantage, because wealth creation isn't usually about activity. It's about ownership. Ownership of businesses that continue creating value year after year. That's why so many legendary investors emphasize the same thing. Find great businesses. Buy them at reasonable prices. Give them time. Why time is the ultimate advantage. If Warren Buffett could give one gift to every investor, it probably wouldn't be stock tips. It would be time, because time amplifies everything. Good decisions become better. Strong businesses become stronger. Compounding becomes more powerful. Think about a snowball rolling down a hill. At first, it looks small, almost insignificant. But as it continues rolling, it gathers more snow. It becomes larger, heavier, more powerful. Eventually, its growth becomes impossible to ignore. That's exactly how compounding works. And that's why Buffett became one of the wealthiest investors in history. Not because he found one magical stock, because he gave great investments decades to grow. The danger of FOMO investing. Now let's talk about a trap that's destroying many portfolios today. FOMO, fear of missing out. Social media has made investing look easy, Every day, someone claims they found the next million-dollar opportunity. Every day, someone predicts a stock will double. Every day, someone promises fast wealth. But successful investing rarely looks exciting. It looks boring. Research, patience, discipline, consistency. That's not what gets the most views online, but it's often what produces the best long-term results. And that's why smart investors focus less on hype and more on business quality. What makes these 5 companies special? Let's step back and look at the bigger picture. NVIDIA, Palantir, Amazon, Tesla, AMD. At first glance, they seem very different. Different industries, different products, different leadership teams. But they share something important. They're positioned around powerful trends. Artificial intelligence, cloud computing, automation, data, advanced computing. The future economy will likely depend heavily on these technologies. And these companies are trying to become essential players in that future. That doesn't guarantee success, but it does create opportunity. The most important question, whenever you evaluate a stock, don't ask, can this stock double next year? Ask something much more important. Will this company be more valuable in 10 years than it is today? That single question changes everything because it forces you to think like an owner, not a trader. Not a speculator, an owner. An owner's focus on business quality, growth, innovation, leadership, competitive advantages, not daily price fluctuations. Risk management matters. Here's another lesson many investors learn the hard way. Even the best ideas can fail. That's why diversification matters. No matter how confident you feel, never assume one company is guaranteed to succeed. Markets change. Technology changes. Competition changes. The future is uncertain, and uncertainty is part of investing. The goal isn't eliminating risk. The goal is managing it intelligently. That's what professional investors do. They balance optimism with discipline, conviction with caution, opportunity with risk management. 10 years from now, the world will look different. Artificial intelligence will be more advanced. Technology will be more integrated into daily life. Entire industries may transform, and some of today's leading companies may become even more influential. The biggest challenge isn't identifying every winner. The biggest challenge is developing the mindset required to stay invested long enough to benefit from progress. Because history rewards those who think long-term. History rewards those who continue learning. History rewards those who remain patient while others chase shortcuts. NVIDIA, Palantir, Amazon, Tesla, AMD. These companies may or may not become the biggest winners of the next decade. No one can know that with certainty, but they represent something much bigger. They represent innovation, transformation, and the technologies shaping the future. The investors who build wealth aren't necessarily the smartest people in the room. They're often the people who remain disciplined when everyone else becomes emotional. The people who focus on business quality rather than headlines. The people who understand that investing is not about predicting tomorrow. It's about preparing for the next decade. And sometimes, the greatest opportunities aren't hidden. They're right in front of us. The question is whether we'll have the patience to recognize them.